Hey, welcome to VIP morning prep. Just checking. I have an issue with my audio. Okay, I think it's working now. All right, guys, ready? This is going to be a longer show. Got a lot to cover. We might even have a special guest or two pop in to talk about CTLP and QUIK. What is going on here? Just as we come in the show, those are. Is this? Let's take a look. I know there's some Fed speakers today, but nope, those are. Man, TD does that sometimes. Okay, anyway, what's going on here? It looks like a bear market rally. I think that's what we're seeing right here today. Bear market rally. Let's look at the levels. SPY is actually gapping above the 50 DMA. And I did a quick analysis this morning. The last 5 times the stock broke above the SPY broke above the 50 DMA, it actually made it to the next moving average. So if that pattern holds, you could see SPY at 410 before possible pullbacks. Same story in QQQ. It's actually below the 50 DMA, but SPY is good enough here to monitor what's going to happen. Now, couple of things. What's this being caused by? Well, there was China CPI overnight, which came in lighter than expected. So possibly some people want to attribute it to that, but I've seen articles saying no, that's actually a sign of recession. It's bad over there in China. I would say this is just noise. And any explanations you see about the action today, including 3 Fed speakers that are coming up today, I think it's just noise. This is, to me, just a technical correction at this point. For now, I'm going to be calling this a bear market rally. Of course, we're not going to call the bottom until we're not going to know the ultimate bottom until months later. So every rally we assume is a bear market rally until months after the fact. So for now, we're thinking this is a technical correction, a bear market rally, but the move in Bitcoin is very notable. Huge move up to 21,000, up 9%. You can see that in BITO this morning. You can see RK, another proxy for risk assets, doing better than QQQ and SPY, up 2.2%. So perhaps Bitcoin is telling the market something about at least near-term, imminent-term risk appetite. You can also see when you're looking at TLT and UUP, you see bonds being bought up, which lowers yields, and that's why the dollar is pulling back. You can look at UUP for a proxy to understand what may be going on with interest rates. So bond market goes up, yields go down, the dollar gets less strong, UUP down. These are all signs we can look at. USO, oil. Now, it looks like oil and natural gas, they're now energy's moving with the market. So basically, people are using oil as a proxy for recession. Is there a recession or not? The market's bottoming or not? So for now, it looks like energy is moving with the markets unless there's some geopolitical exogenous shock that happens in the news. So all of these moves make sense here. What's interesting is coal, BTU, and ARCH, which we talked about on Wednesday night as a potential play on the natural gas crunch happening that's going to be happening in Europe because of Russia's recent move. This has not really separated itself as a potential play on that idea yet, right? We had that spike. We did Tuesday morning. That's what that spike was about, right? We had this big spike because, hey, no natural gas in Europe, better use coal. Gave it all back, and it's really following oil at this point. So I'll be watching this to see if there's going to be any separation from oil price action, any sentiment, that may build in regards to, oh, this is going to be the solution for the winter in Europe. So we got to watch that BTU and ARCH. Mosaic, another one. This is one of the 3 or 4. There was a 4th one introduced by Matt in our community Wednesday afternoon. I forgot the name of it. I have it in a different watch list. But in any case, it's MOS, IPI, and CF. And this is up, and this is a little bit of a play on natural gas as well, with the high natural gas prices in Europe. Lower natural gas prices in North America increases profit margins for the potash and fertilizer stock. So maybe that's starting to take hold here. But again, this is almost just like seems to be moving with the whole energy sector last couple days. And we have uranium and tan. These have been Awesome. Uranium holding its gains this morning. And, the ones we look at and talk about a lot is UUU, CCJ, DNN, and, of course, SMR, small modular reactors. So that's good. Got a nice solid core position in all of those picks. I don't have URNM, though, the ETF. Maybe I should get that. Now, I want to bring attention to solar. I've said this a few times, and you know what? I'm going to put something out there. If you are an expert in the solar sector, or if you have a stock, it's particular solar stock, bring it to me, our community, make a presentation. You'll get a free month or two of subscription service to StoryTrading. I want to put that out there because we have not had any experts. We've had uranium, but we haven't had solar. And solar, look at First Solar keeps getting these crazy upgrades every day. Actually, if you look at this, Goldman Sachs flipped somewhere in here from a sell to a buy. Here it goes. Goldman Sachs went from 60 price target to 172. What is going on? Well, guess what? I looked into this. What's going on right here? See that gap? Inflation Reduction Act, right? Sometimes the simplest plays are the ones that make you the most money. Very superficial analysis. Oh, Inflation Reduction Act, good for solar. There's tax benefits in there for the solar industry. Boom, multi-week run. You see it across the entire solar industry, including Enphase. You see it with TAN, F Solar. We've missed this run. Sometimes I think we spend too much time trying to be cute, trying to be smarter than the rest of the market. The obvious plays sometimes work. And in just a minute here, I said we're going to have a special guest. So, all right. So what I'm going to bring up here before we bring our special guest, we're going to move on down to QUIK, QUIK. Yesterday, we noted in pre-market the news that QUIK got $6.9 million base contract with the Department of Defense, a contract that could be worth up to $72 million over multiple years. So this worked out really well for us, at least for me, and anyone else who got in right at the open yesterday did really well. And I got a special guest here, Ashleigh. Ashleigh, I'll bring him on in just a second. A little background first. Ashleigh was an important part of AIR, the whole AIR story in our community. We were following that for a couple years, and together he helped us identify the inflection point in AIR. So I know he's been following QUIK, QUIK. So invited him on to talk a little bit about QUIK. Ashleigh, are you there?
Hey, how's it going, Ben? I'm here.
Good. I heard you moved to Portugal.
I did, yeah. Loving it so far. I'm actually awake for the market open, which is nice.
Very, very cool. All right. Well, glad to see you. Always good to see you. We got QUIK here. Let me pull up the chart. So what's interesting is, I'm not nearly as familiar with this company as you are, as I scroll to look for it. But yesterday in our chat room, I put the transcript to the most recent earnings conference call. And what I discovered was that this deal was already pre-announced on the conference call. No press release. The deal with the numbers was pre-announced, but we didn't know who it was with. So that was interesting.
Actually, that slipped by. I did listen to the conference call, but I must have missed them talking about this particular deal. They did announce a $7 million deal.
It's this one. That's this one.
That was a licensing deal, though. That was announced on the same day as the conference call last time. I think these are additive. This is 6.9 million with the Department of Defense for the development of a eFPGA tool. I do have I'm going to be speaking with management next week, so I'll hopefully have some clarification as to what this deal means for them. So as they said, it is 6.9 over multiple years, and there's then some options to increase it to 72 million.
Right.
Which obviously is approaching their market cap, so that makes it pretty exciting.
Yeah. So, simple question for you. I know you're talking with management next week, but do you think this deal marks? I'm always looking for inflection points, right? We had that inflection point in the AIR where that big order signified that those orders were recurring revenue. It wasn't just it was for production, right? It wasn't just for testing and validation. And that was the inflection point for AIR. Do you think this contract could be an inflection point for QUIK?
I think if you believe management, and that's kind of been maybe perhaps I've been somewhat skeptical as a few others of what management says, which is, you know, a problem, and is what makes it for me not a core position but a small position. Is if you believe them, then the inflection point was really in May of 2021, and then they announced a $3 million IP deal, and then another one after that, and then this is the third announcement, and so they're starting to get more announcements quicker, and I think if you run the numbers on this kind of gives them a little more than $3.5 million of quarterly revenue just off the announcements, and that gets them pretty darn close to break even, and that's locked in. So it would be almost difficult for them to swing to a loss at this point from where they are. So I think they signaled the inflection on that May 21 call, and we're seeing the proof in these announcements. And I'd say that the one they announced a couple months ago showed that they've inflected. As you notice, the stock really hasn't crashed from last November, which was a little strange. And they've done 2 small financing with long-term investors of maybe a couple million just to get them to this point. So they're doing the financings right, kind of in my opinion.
Yeah, this stock has outperformed the market. It's you can see over a year, it's up from about $5. 6 months, again, up from about $5, and it held the 50-week moving average here last week, and yesterday or 2 days ago bounced off the 200 DMA. So definitely a lot of relative outperformance compared to the market and technical strength here. So you said there's a small position for you. Did the press release yesterday this deal inspiring you to add more at this point, or you want to talk to management first?
Well, actually, I initiated the small position pre-market, or roughly at open yesterday, kind of when the news came out. I've been waiting for a pullback. I kind of wanted to kind of re-add to the position. Maybe if it got down to the 5s. It's been, as you said, it's been strong. So I haven't been wanting to get back in due to I'm not fully comfortable with management. But since it had dipped back into the 6s, combined with this news, it felt like a safe place to start a small position again. I'd been involved in until last November when it got pretty high, got ahead of itself. So wow. It could turn into a core next week if what they say, if they have a nice roadmap, and depending on that 72 million of optionality from the DoD. This sort of signals some type of validation that they've really got something.
Yeah, it looks like a very exciting contract. So, Ashleigh, thank you so much for your time. We'd love to check in with you again in the next couple of weeks after you speak to management. Any last words?
No, I think that's it. Thanks for having me on. It's a pleasure.
Awesome. Thank you, Ashleigh. Have a great day. Enjoy Portugal.
Yeah, you too.
All right, great. So we got the update from Ashleigh there. Who's going to be finding out more about QUIK and getting back to us. So let's go back to our list. We're talking about Solar, Enphase, TAN, that whole solar sector taking off. So yeah, if you're an expert in solar, let us know. Make a presentation in the community, and you'll get some free membership over at StoryTrading. Now, a couple other big news items yesterday the market's reacting to: DocuSign earnings and Zscaler earnings. DocuSign earnings, pretty good, man. It's exciting to see that. Perhaps could this be the sign of the bottom of the growth stock era? So we'll have to see over there. Zscaler, this is cybersecurity. Cybersecurity has been really hot. There's been a whole bunch of upgrades from analysts recently on Zscaler and crowdsourced. You can see PanW. All these stocks doing really well. If you look at the PEs, though, really high. It's like over 100 for Zscaler, given their guidance for 2022. Yeah, their 2023 guidance even, like 100 PE. DocuSign is much more reasonable PE. I think it was around 38 when I had calculated it. So, all right. Well, we got to talk about some other stocks. I want to get to TMUS, Celsius. But first, we have another special guest here to talk about CTLP. CTLP was a VIP pick by Money Mark Gomes, who gave us a presentation on that. They had earnings last night. So, Mark Gomes, welcome to the show.
Hey, how you doing?
Doing great, Mark. CTLP, always on our watch list, is one of our VIP picks since you presented it. I like the story. They had earnings yesterday. Why don't you give us a quick update on it?
Yeah, so it was a good quarter. They beat on the top line and bottom line, 58 million versus 56.3 expected. They gave guidance that was in line with expectations for fiscal 23. This was their last fiscal quarter, so that's typical of what they do. They're good management team. The chairman of the board comes out of JP Morgan, was the CFO and the head of M&A for JP Morgan, so he knows the game as well as anybody for a company this size. So that was all positive. I'd say that it was all systems go. They have new modules. They're expanding their product set. They're expanding their ability to sell. Yeah, so this is just a great company overall, right? This is really just, if you think about SAP or Oracle, what they do for corporations, this is what Cantaloupe does for unattended retail, both looking at vending machines, EV charging stations they're getting into, and the like. The other big news that may have been unsettling for folks initially in after hours was a CEO transition, from Sean to Ravi being the COO. Okay. On the call, it seemed pretty clear that this was a planned transition. Okay. Ravi thanked Sean for his mentorship in preparation for this role. It was said on the call that Wall Street is very familiar with Ravi, and this is the little clue that I really liked, is that Sean was lauded for turning the company around, and that with the turnaround complete, that they were handing the reins over to Ravi with all of the growth initiatives that Ravi has put into place, making him the obvious choice to be the new CEO. So, the takeaway here is that the company is now signaling that the turnaround is complete, and now they're going to focus on expansion of revenue and margins.
Great. I got one question for you. If you look at valuation, I love the story. I hear a lot of good commentary from other people in the community regarding management and this conference call. But if you look at the PE or EBITDA ratio or whatever, like the adjusted EBITDA ratio is like 38. If you use the adjusted number, if you use GAAP net income, it's much, much higher. So superficially, it looks like it's not necessarily that cheap. What do you say to someone who's like me, who's looking at it superficially?
Yeah, so first of all, you can look at Wall Street estimates, and they're much higher in terms of what the price target is. And the secret sauce to the way I do things personally when I'm valuing a company is not looking at the current operating margins, but what the operating margins should be in the future. Right. And that's why a lot of people look at price to sales ratios, right? Because it's a quick kind of cheat code to say, oh, well, if the company's selling at 1 times revenue, then, it's cheap. Well, I like to look one step deeper and say, where are the operating margins going? So when you look at a company as dominant as Cantaloupe and what they're doing and the future they have in front of them, having locked in so many customers and now focusing on potentially doubling the average revenue that they get per customer over the following, several years, most of the revenue that they get, most of the increased revenue they get from customers drops straight to the bottom line, leading to operating margins that could exceed 20 or 30%. And if you look at like an SAP or Oracle got up to over 50%. I'm not saying that's happening here, but it's just an example to where if you take the operating margins of Cantaloupe and take it to a more normal level for a dominant player in a software-related space, you can see that this company's stock could, has the potential to go into the 20s before too long. And I'm not saying, this year, but, a couple of years down the road, we could see this looking at a $20 stock.
Okay. Is this wait time or gold mine?
Oh, this is most definitely gold mine. I mean, they're already profitable. They're beating estimates. This is not a typical money mark pick in that it's already, prime time. This is a good This is a growth name that's known by Wall Street as GARP, growth at a reasonable price. So this is
I'm
one that
looking.
you
I'm
just
looking at. I'm looking at the headlines here from Benzinga. At least it says company reported mixed results, inline guidance. Do you see it differently? Is it inline guidance?
I mean, I think I don't. Yeah, it's definitely inline guidance. I
Yeah.
don't see that as mixed results because if you know the company, you know that they don't provide.
Oh, they're saying
above.
mixed results. I see it down here further down. It says mixed results because the EPS was I guess the gap EPS net income was -3 cents versus a -1 cent estimate, and then the top line beat by $1.5 million, 1.7 million.
Yeah,
That's why
I'd
they're
have
calling it
I'd have to
mixed.
I'd have to double check that because that's not the EPS estimate that I had for
Okay.
what they reported. I
Yeah,
had
that stuff isn't always accurate.
Yeah, I had -3 versus -5.
Okay. All right. So add it all up. Overall compared to your expectations. Was this something that net is impactful enough for you to say, hey, I may want to increase my position here, or just status quo?
Yeah, I mean, look, they made progress in the quarter. The company is doing exactly what I would have hoped and more because they're beating expectations, right? Stock is trading for the same I recommended it for a few months ago before it went from 550 to nearly 7, right? Now we're back to I suspect that maybe word of Sean's departure leaked out and people didn't really think about why he was departing. Personally, I see this as bullish news. They're getting rid of the turnaround guy, right? They're shedding a member of the management team, and they actually brought an incoming CIO who's known for expanding product sets. So that was the swap that they did. So they swapped somebody who needed to turn things around, fix things, for somebody who's known for helping to grow things, right? And the stock here is back to where it was where I originally picked it. So the stock may have pulled back with a leak on Sean's departure, and I think that was the wrong move. And as you can see in pre-market, the stock is showing strength relative to yesterday's close.
Yeah. All right. Awesome. Thank you so much for the update, Mark. Where do people find you again?
What's that?
Where can people find you? Money Mark Gomes, or what's your website?
Money Mark Gomes on Yahoo. Or Mark Gomes Stocks with 2 S's in the middle. Gomes Stocks at .wordpress.com.
All right, great. Thank you so much, Mark. Appreciate your time.
Thanks, Ben. Take care.
Yep, take care. All right, great. So, longer show today. We got a couple more things we want to talk about. T-Mobile. T-Mobile is poised to get a new all-time high this morning. All-time high is 148.04 cents. You can see the ask is 147.99. So we'll see what happens with that. Why? Because they have a big stock buyback, $14 billion share buyback program. Now, I put an article into the rooms about that. Really great article. I suggest you read it. Talking about, because this was expected, a buyback. What wasn't expected was the timing of it and how big it would be. So it turns out the timing was pulled forward. It's happening sooner than expected, but the size of it smaller than expected at 14 billion. But not necessarily everyone expected this. So it's a catalyst this morning, at least in pre-market, for this stock to challenge all-time highs on T-Mobile. Take a look at that report I sent you. It's really, really interesting as far as their expected EPS growth. T-Mobile really poised to, I think they said like $11 EPS within a few years. And, that's like what kind of PE, very low PE that would imply with the growth coming up. So take a look at that article. Now, moving on, Celsius, man, I keep pounding the table on this. And at StoryTrading, keep saying this. We want to understand the story behind the trade. Look at stocks holistically, based on sentiment, catalysts, fundamentals, and technicals. Why? Because the market is always right, I like to say, right? So, when a fundamentalist comes and says, no, Celsius is too overvalued, I say, Look at the technicals over here. Look at how it reacted after Pepsi came on, the Pepsi catalyst. $93 is the low the day the Pepsi announcement was made, and it's held 1, 2, 3, 4, at least 5 times, tried to spike down to that level, and it's held intraday $93. That's telling you the market thinks this stock is worth at least $93. So there's something, the wisdom of the market is seeing that fundamental investors don't see. That's likely the intangibles that Pepsi brings to the table for the growth of this company long term. So $93 is the value area. I've been saying that for a long, long time. And now you have the technicals moving up. You have the 50 DMA coming up to match that $93 level. It's been true for a long time, since August 1st. It's been true that that level has been a great buy. Will it always be true? Not necessarily. Doesn't mean it can't break. Doesn't mean if macro conditions deteriorate and market goes down 50%, right? It's not going to hold 93. But for today's conditions, 93 is the price that's really good. That's the price that the market's telling you it should not go below after that Pepsi deal. So that works out. If you bought every time it's approached $93, you've made good money on Celsius. Now, I pointed out yesterday that the market may be poised for a rally. Yesterday near the close, I pointed that out, and that was because of charts I was seeing, like Celsius yesterday breaking above the 20 DMA. It was charts like Clearfield I was seeing bouncing off the 50 DMA. There were a lot of individual charts starting to show strength, and oftentimes you can use that as a lead indicator for what the market may be doing. And I saw that across many, many stocks. Now, Clearfield actually added a little bit more yesterday. Chris Harbor in our community let us know there was a BlackRock increased their stake. I think they own, I forgot the number, but it was maybe over 10% actually. They bought Clearfield. Chris also recently brought COMM to us, COMM, lots of insider buys, much cheaper than Clearfield. So that's something to look at, cheaper from a PE perspective. That's COMM. I'm sorry for all these connectivity issues. You really got to contact the host provider, see what's going on with that. All right. Other thing I wanted to point out, again, here's another chart that says, hey, we may be ready for a bounce. I pointed this out the other day. NVIDIA, the other day I pointed out we're near the 200-week moving average, and you see it's starting to move up. I put a note from an analyst in the room this morning. He said 135 looks like a really good risk reward for an NVIDIA, which matches what we're seeing on the technicals here. 200-week moving average bounce, not to the penny, but close enough. Air is a stock that I think can do very good today in this specific bear market rally. You can see the chart. It's pretty clear what can happen here. I think the target's going to be $16 or $14.69 now. 2 minutes till the open. We're going to try to finish this quickly. Even DRIO was showing signs of bottoming out. Another sign that I thought, okay, maybe we're in for a rally. GOEV, another one, filled the gap over here, right there. And I think that may be poised for a rebound today. We'll have to see. DWAC, real quick. I promise a DWAC rant. All right, well, all I want to say here is we got some information what's going on. DWAC put a press release out. They could not get the votes, 40%, right? So it didn't pass to extend their deadline. So DWAC paid a few $1 million to extend their deadline by a few months, something to that nature, right? They're going to try to get the vote later. But they put a statement out saying, hey, we haven't heard from the SEC in 115 days. Usually they respond in 30 days. So listen, I don't want it. A lot of people may know my political thoughts because I posted on Twitter. But to me, it's plainly obvious that this is political in nature. Now you can agree with it or disagree with it. But listen, I think, the funny thing is the press release that DWAC put out said the SEC is supposed to protect retail investors. And in a way, if they derail this deal, it's going to be good for retail investors because at least they get $10 a share out of it, right? Because if the deal goes through, the stock's going to go to $1 or $2. But we know that's not the motivation behind the SEC. If they really cared about retailers, a lot of other things they could be doing. And, this just pisses me off because I think people deserve a right to lose money, right? This is supposed to be a free society. We shouldn't be having the SEC making political decisions trying to derail a deal, even though it's probably going to save money, save people's money in the end. Give them the freedom to make a mistake here. DWAC's probably going to $2 if the deal goes through, $10 if it doesn't go through. All right, 9:30 open. I think that's all we have time for. I wanted to go through the CFVI support levels as we open here, though. 1194, 1198, 1188, 1194. You see the top of those candles. It bounced off it yesterday. If for some reason we go below that for any period of time, more than a couple minutes with high volume, you got to test possibly 1136 low. All right, I got to go. We couldn't get to everything. Watch XXII. I think that might be poised for a rebound. HYRE I wanted to bring up because Randy in our community thinks that's a really nice setup. We talked about it the other day with a $100 million loan. But I got to go. I might want to make some trades. Have a great day, everyone.